Welcome back to Tashkid FX for another Quant price prediction update, and in this video I'll be giving you the latest developments that have been happening here on the Quant chart, which at the time of this recording is holding above a key area of support at around the $110.9 mark. We are also holding above the 20-day MA here on the 4-hour chart, which is now acting as resistance. We have also seen a breakout out of a chart pattern that we had information over here, which is a head and shoulders pattern, whose minimum target areas at around the $114 mark we have fully maximized in a breakdown that has now given us a low at around the $106.1 mark. And after seeing the low at around the $106.1 mark, you can see that we saw the formation of this long wick to the lower side, which was an indication that the buyers were trying to get a little bit stronger. And you can see that after printing that long wick to the lower side, we saw this bounce to the upper side in a move that has now given us a peak at around the $124.1 mark, which is a good indication that the buyers were able to take over the market and also gave us a high at around the $124.1 mark. But at the time of this recording, they are getting a little bit weak because we are seeing a bit of a pullback to the lower side. And at the time of this recording, we are holding above the 20-day MA here on the 4-hour chart, which is now acting as support, meaning that in case the 20-day MA continues to give us support, there are chances that we might continue gearing up to get to our next key area of resistance at around the $124.9 mark. But in case we lose the 20-day MA, then there are chances of seeing a bit of a breakdown to the lower side to our next key area of support at around the $110.9 mark. We have also continued to obey the Elliot structures, and before I get further into the technical analysis and also give you my next price targets here on the Quant chart, first give this video a thumbs up, subscribe to the channel, and also check out the channel membership. And allow me to first give you a recap of what has been happening, where you can see that after making our bear market low at around the $40.1 mark, we started this massive bounce to the upper side obeying the Elliot structures, where I have this Elliot structure in blue having the wave 5 giving us a peak at around the $229 mark, and also completing the formation of that larger Elliot Quant 1 to the upper side. And after seeing the formation of a larger Elliot Quant 1, whatever we expected next was a corrective structure to the lower side in the formation of these higher Elliot Quant 2, in a move that we have seen over here on the charts, now giving us a low at around the $94.4 mark. And there are chances that whatever we are seeing is the start of an impulsive wave to the upper side in the formation of these higher Elliot Quant 3. And I have two possible scenarios that could be playing out here on the Quant chart. And the first one is that we have bottomed out in the formation of these larger Elliot Quant 2 by getting a low at around the $94.4 mark. And whatever we are seeing right now is the start of an impulsive wave to the upper side in the formation of these higher Elliot Quant 3, and sketching out a target area to the upper side in the formation of that larger Elliot Quant 3 by connecting the Fibonacci's, that is the trend based Fibonacci, from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave. That gives me a minimum target area to the upper side in the formation of that higher Elliot Quant 3 at the fib level 1.618, and that is at around the $401.9 mark, and that is the minimum that we can expect that higher Elliot Quant 3 to the upper side to do. And in the formation of that higher Elliot Quant 3, because of its impulsive nature, I was also expecting to see another 5-wave structure in formation within the formation of that higher Elliot Quant 3, and I believe we had been seeing such a scenario over here, having this as a 1-2 setup. And after seeing that 1-2 setup, we started this 1-2 setup, other 1-2 setup over here, having that as the first wave, giving us a peak at around the $165.5 mark. And whatever we had been seeing over here was a corrective structure to the lower side in the formation of these higher Elliot Quant 2 before we can expect a wave 3, then a wave 4, and then a wave 5 to fully maximize our target areas to the upper side in the formation of these wave 3. But I have an issue with this 1-2 setup over here, since using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, I was expecting this second wave to the lower side to retrace into the area between the fib level 0.5 and the fib level 0.78, which is a target area that lies between the $133.5 mark and the $115.5 mark. But since we have lost the fib level 0.78 and even lost the fib level 0.88 at around the $109.5 mark, then that is now putting a major challenge on the formation of these 1-2 setup to the upper side. And that brings about the other possible scenario that could be playing out over here, suggesting that there are chances that whatever we are seeing over here is just an ABC corrective structure, where we can term these as the wave A, then that is the wave B giving us a peak at around the $165.5 mark, and there are chances that in case Quant continues to give us a breakdown over here, continue losing key areas of supports like the area of support at around the $110.9 mark and also the area at around the $100.3 mark, there are chances that we might continue seeing an impulsive wave to the lower side in the formation of this wave C, where I'll be expecting the formation of that wave C to give us one more leg down to the lower side in the formation of this higher Elliott wave count 2. So that is the alternative scenario that could be playing out here on the Quant chart in case the breakdown continues and also lose our significant key area of support at around the $100.3 mark. And in the formation of this higher Elliott wave, that is the formation of this wave C, I believe we are seeing a 5 wave structure that we also expect in the formation of that wave C because of its impulsive nature. And if I draw it out, we can have these as the first wave to the lower side. So we can have these as the wave 1, then a wave 2 giving us a peak at around the $148.2 mark, and whatever we saw over here giving us a low at around the $106.1 mark is the formation of that wave 3, and whatever we saw earlier in the day was that bounce to the upper side in the formation of that wave 4, and there are chances that in case the breakdown continues, then that will be the formation of that wave 5 to give us one more leg down in the formation of this wave C and also give us one more leg down in the formation of that higher Elliott wave count 2. And getting to see whether the second, that is the fourth wave to the upper side over here, has done the minimum that we expect a wave 4 to the upper side to do by connecting the Fibonacci's from the high of that wave 2 to the low of that wave 3. That gives me a minimum target area to the upper side in the formation of that wave 4 between the fib level 0.5 and the fib level 0.382, which lies between the $127.2 mark and the $122.1 mark, which is a target area that we have managed to get into. And there are chances that the breakdown that we are seeing over here could be the start of the formation of that wave 5. And in case we lose the 20-day MA and also lose our next key area of support at around the $110.9 mark, then that will be enough confirmation that we are back in the formation of that wave 5, where I'll be expecting the wave 5 to fully maximize our target areas in the formation of this wave C and also give us one more leg down to the lower side in the formation of this higher Elliott wave count 2. And I believe in case such a move plays out, then that will be another perfect entry to get back into Quant so that we can be able to ride this massive bounce to the upper side in the formation of this higher Elliott wave count 3. And trying to get a minimum retracement area in case such a move plays out in the formation of that higher Elliott wave count 2, there are chances that that wave C to the lower side might get us back to the area at around the $80.5 mark, because if I use the Fibonacci's to get a minimum retracement area to the lower side in the formation of a larger Elliott wave count 2 by connecting the Fibonacci's from the low of that wave 1 to the high of that wave 1, the minimum retracement area to the lower side is the area between the fib level 0.5 and the fib level 0.618. So using the Fibonacci's, connecting them from the low of the first wave to the high of that wave 1, the minimum retracement area is between the fib level 0.5 and the fib level 0.618. And I can first remove these Elliott wave structures, which is the red target area down here, which lies between the $134.7 mark and the $81.2 mark, meaning there are chances that in case Quant continues to see the breakdown, lose that key area of support at around the $100.3 mark, then expect one more leg down in the formation of these higher Elliott wave count 2 back to the area at around the $81.2 mark here on the Quant chart. So that is what I'm expecting here on the short-term scenarios, and let's be patient and see how that plays out, and I'll be keeping you updated.